Hey, good evening, everybody. Today is, what is it today? It is November the 4th, and it is premium training night here with Cashflow Tribe. And so I'm so excited for everybody who's here today. For those watching online, my name is Daniel Blagrove, and I am going to be the moderated host just for tonight because I am bringing you someone who is smarter than me, knows more than me, and has been doing this game way longer than me. And that's who you want to hear from. And so, but before I get to him, I definitely want to just thank you, each and every one of you, for taking time to be on today. For those who are on the Zoom call, definitely want to shout every one of you out. Tom, Kevin, we got Jed, Alex, and more will be coming in. Just want to say what's going on with you guys. Good evening or good afternoon, depending on where you're tuning in from. Hope you all are doing super well and really, really excited to get this training on and get it going. But first, I do got a couple of announcements. And the first announcement is this. If you have gotten any value, all right? If you've gotten any value from being a part of Cashflow Tribe in this community, whether it's on our website, whether it's on our Facebook group, our Facebook page, or just word of mouth, do me a solid favor and leave a Facebook review. If you can leave a Facebook review, that would be phenomenal. All you got to do is click the link that's in the comments. I'm going to drop it down below in the Zoom call so all y'all can do it as well. But if you're watching on the live stream, there is a QR code that you can take a phone, go to your camera app, snap a picture, or don't snap a picture, sorry. Just put your camera up to it, and in the viewfinder, there will be a link. Tap that link, and then it'll take you to the page where you can leave a review or a recommendation, as Facebook puts it. Or you can just click the link where it says www.facebook.com/Cashflow Tribe Canada/reviews. The next thing I want to say is we got special people in this Zoom call, and that is because they are part of a premium membership. So they get access to these calls that happen on Mondays and Thursdays, plus courses, and access to bonus content and materials because they want to level up and be able to do real estate. And so if you are an individual who's looking to do that as well, want to highly recommend you join Cashflow Tribe Premium. You can see the links there as well, the same way about Facebook reviews. Go on the QR code or click the link, and you'll be able to join us just like these lovely people we have in the room here today. And in addition to this, we also got a special event coming up this weekend in Waterloo. It is going to be centering all around short-term rentals. Short-term rentals. If you're looking to get into the Airbnb space, the Vrbo space, the Expedia space, when it comes to sharing short-term rental units, rental properties, we definitely got a special event happening this Saturday. It's going to be led by our good friends at Blue Ocean Property Group, Allison Bazook and Keith Maxey, who are going to be leading this event. I'm going to be there. We got Jed, who's on our Zoom call from Alberta, flying in. Who's already here, actually. He's on location, going to be at the event, and many others as well. So definitely get your tickets if you need, if you need any. We got a 30% discount coming out, so definitely reach out if you need any more information on it. But that ain't what we're here for. We are here for our honored guest. For those who don't know, Robert has over 30 years of experience in financial services. Already has personal and business taxation and business operations through previous roles with the federal government. This ain't no dollar store we're talking here. Through previous roles, and he has served in several small to mid-sized businesses, and his passion for what he does is infinite. It keeps going, and it's gonna go tonight right into this call. So he's also worked with hundreds of real estate investors, advising on taxation, incorporating, landlord-tenant disputes, and business building, and a lot more. And so I'm really excited to go over some special talks today. We're going to be hearing from Robert himself, Robert Watterson. I'm so excited for you. I'm really looking forward to for everybody getting value from what you're going to share today. So for everybody tuning in, hear me out. Please get your notes, get your pens, take some questions down. Let's get them answered and take note of all the golden nuggets we're going to be served today as we hear from Robert, aka Bob. Bob, the floor is yours. Ladies and gentlemen, put it in the comments. Welcome our honored guest tonight. Thank you so much.
Thank you very much. That was a fantastic introduction. That's great. Thank you. As Daniel kind of alluded to, I have been through the mill. I've been working in the industry for a very long time. I like to tell people that I graduated from the University of Hard Knocks, and along with a few others, but that one. And we want to make sure that we can help other people to not go down any roads that are going to hit roadblocks or negative reactions or cost you money that you really don't want to part with, and you shouldn't want to part with. We are an enemy of wasted money, right? So everything we do with the client or you in mind, so that you can either save, protect, or earn a lot more than you could otherwise. So one of the things that we want to talk about is something that for most people we're coming up to very shortly, is income tax. Now, I know income tax. Who wants to talk about income tax, right? Most of the time you sit and talk with an accountant that can probably put you to sleep. I can probably put you to sleep too if we want it, but I'm going to try and not do that tonight. One of the things that we try to do as much as possible is to avoid unnecessary costs. One of the biggest costs you can have is penalties and interest from CRA. There is nothing that is more wasted than money given away to CRA that you don't have to give them. We want you to find all of the loopholes, all of the legal ways of saving, earning, and growing your business. And if there's any assistance out there, we want to help you get that as well. But we want to keep everything compliant. We are a compliance office. I'm a compliance officer, and we are a compliance for FinTrack. So we have money business accreditation. So anything to do with financial, anything to do with income and expense, we work with it. This is our 39th year in business, so anything you can pretty well think of, we've either seen it, done it, tried not to do it, went around it, for sure. So let me cancel it. I'm leaving the meeting. So what we are going to do at the end as well, I believe, is have some questions and answers. But taxation is actually something you should look forward to. There are ways of doing your taxation so that you make money on taxes. Paying tax is a good thing. I have never heard from anybody who made money, properly paid their taxes, that said, oh, I wish I didn't have to pay so much. Well, no, I can't say that. Everybody says, I wish I didn't have to pay so much taxes. But that didn't, like, paying your taxes good. It feels good. You're a good citizen when you're doing that. We've actually dealt with people who forgot about the tax portion, and the nightmare that that causes is just unbelievable. So keeping good books so that your taxes, and you don't miss vital expenses, right? So there are some expenses that some people don't even realize, and maybe everybody here is aware of them all, but I'm going to talk about a few just to make sure that there isn't anything that you've been doing that you didn't realize you could write tax off on. So if you borrow money to use in your business to allow you to earn money, the interest on that money is tax deductible. The main thing you want to do to be able to write off the tax is track where it came from, how much it costs, and where it's going, especially where it's going. One of the biggest mistakes people make is that they borrow money and they put it into their personal account, and then they move to somewhere else to pay a bill, like to a lawyer to pay on a down payment or anything like that. If you do that, CRA, if they review it, can determine that it is personal funds and not allow the interest to be a deduction. So you want to have a clear path from the source to the target. Never have it stop in the middle on its way, even if it's stopping somewhere to add more money to it. It will cause you a headache, I promise you. So the best thing that you can do is use as much what we call OPM, other people's money, as you can, because the cost of using other people's money is tax deductible against the income or the profit of your business. If you borrow or use funds and you're able to do that at a lower interest rate than you can get a return on those funds, it's better to borrow it and invest and do whatever you need to do, because the money is cheaper and you earn more. And because you get to write it off, why wouldn't you? One of the secrets that I go over with a lot of our clients is when you have your own property and you have a rental property, you should not have a mortgage on your own property. Mortgage on your own property, the interest is not tax deductible. So your mortgage should be on the rental property and be deducted on your income tax. That way you're moving your personal expense to your business and you're able to write it off. That could be a significant reduction. I know if you have a look at your home annual statement from the lender, the amount of interest they charge, it's astronomical. I was just looking at one today for a client, $255,000 in interest over the term. That's a lot of taxes that you can be deducting. So that is one area that you definitely want to take into consideration. Another thing that you want to keep track of is any professional fees. Okay, a lot of clients have, when they first come to us, have not realized that every single thing that they pay a professional fee for, including real estate agents, law firms, anybody who's doing documentation for you, as well as bookkeeping and accounting. If you have bookkeeping or you pay somebody to do your tax return, it's tax deductible. So don't forget those expenses. Now, with short-term rental or residential rental, of course, there's no HST. So we don't have to worry about HST in that area. If you get into commercial rental, that's a completely different type of business again. And that would be a different discussion. But the next area that I've had a lot of dealings with people is understanding when is the right time to incorporate. You can incorporate too soon or you can incorporate too late. A lot of people don't even realize that the rental business is incorporated. You can incorporate it. It's incorporatable, including real estate agents can now incorporate their business. So there's a lot of areas where you can save and reduce your expenses in that area. Or not in that area, but in taxation. Your personal taxes, you're paying up to 48% of your income, your profit, directly to Revenue Canada. If your income is significant in your business, that can be very, very costly. If your business is earning a significant income and you put it into a corporation and you ensure that it is what we call a CCPC, so you go by all the rules to be a Canadian controlled private corporation, your income tax can be as low as 6.5%. So that's a 41% savings. And all of that 41% is your money. So you can give it to the government or you can save it and do some investing with it. Now, not to say that all your business income can be put into a corporation and never taxed or taxed very low. You have to pay income tax on anything you take out of the corporation. However, you have the freedom to time it the way you want to. As well, if you own a home, a rental property, and you sell it, because it's a rental property, you're looking at capital gains tax. Capital gains tax can be borne by a corporation, the same as it can by a person. So if you buy a house in a corporation name and with the idea of renting it out or doing a few things and selling it, the capital gains would be taxed at the business rate, not your personal rate. So that can cause a major savings on an asset sale if you're moving assets around. There are also ways of working cryptocurrencies into your business to add and save on taxes. We have a few stories and good things that happened in the past about that sort of thing. But to make all of this work, there's one thing that is desperately important, and that is bookkeeping. Even in rental, you have bookkeeping. You need to keep track of everything. You need to keep copies of all receipts for every kind of expense you have. What I usually tell people is if you spend money, you part with money, you get something back. In addition to whatever the service or product was, you get a piece of paper of some kind. If you don't, ask for it because they're required to give it to you. That is what you need to write it off. Without that, CRA can deny it altogether. It doesn't even, it doesn't even count if it's paid by credit card and you have the credit card bill. They want to see the physical source document. So what I recommend to people is when you have a source document, especially a small one, like a not full-size piece of paper, take a picture of it. Once you take a picture of it, keep a special file where you put them all. And all of your receipts go in there. It doesn't cost you a cent to keep a receipt. But if you don't keep a receipt, it can cost you up to 48% of the value of that receipt. So even if you don't know if you can claim it or not, keep it and find out. Ask your tax professional. I also, as a rule, recommend to people that if you are in the business of anything, if you are in the business of rental, if you are in the business of real estate, you're not in the business of taxes or accounting, hire a professional when it comes time. One of the things I've told people before, you don't do open heart surgery on yourself. You don't represent yourself in court. You shouldn't be your accountant and represent yourself to the CRA, especially if the CRA is auditing or reviewing your documents. They will tell you they're your friend and they're going to help you. That's like your bank manager saying, he's your friend and he's going to help you. Do not rely on anything from CRA. First of all, they're not legally allowed to give you tax advice. And secondly, they're not going to help you. The other thing is that half the time, if somebody phones, for example, and says they're CRA, they're not, right? At least 50 to 75% of the telephone calls that go out today that are from supposedly CRA are actually scam calls. If somebody calls you, never pay anything over the phone, first of all. Never pay anything to CRA in any way, even if you get it in the mail, until you have confirmed it with an accountant or a tax preparation expert. We have actually seen clients get $80,000 tax bills that were bogus. We contacted CRA and they said, no, we didn't send that to them. They owe $2 or $20, whatever it was. But they got a tax bill with a place to send the money to. And it wasn't real. So never pay unless it has been approved by a professional. Also, with using a good set of books and keeping track of everything, you'll know your income. You should not be using a personal bank account to receive revenues, even from short-term rentals, or to pay your expenses from. You should be using a separate, dedicated business bank account. regardless of your setup. You have to be either a sole proprietor, a partnership, or a corporation. You must be one of those three. If you own property, if you do anything, you are in business. You must consider yourself one of those. Find out which one is best for you, review it with your tax professional, and follow the rules. The biggest and most expensive thing that you can ever experience is a bad CRA audit. And CRA is auditing everybody these days. They're bringing in third-party contractors to audit everything. Crazy. We've had them audit people for their children. They've been claiming their children since they were born, and now all of a sudden CRA wants proof that they exist. It's just crazy, the stuff they're doing right now. Protect yourself. You don't want to waste money. One of the biggest wastes is trying to come up with all the paperwork they're looking for if you don't keep a good set of books and a good set of records. If you have all of it, it's easy to follow through. You have your receipts, you can provide them to CRA and go on your way, and everything is fine. If you don't have them, you have to go crazy to get them. The other thing, you always want to be compliant with everything CRA related. The reason for that is you may have heard of red flags on files in the past, and a lot of people will say, oh, that's not true, it's a conspiracy theory or whatever. It's true. CRA tracks errors and adjustments and corrections. And if you have that on your returns, you are targeting yourself for audit. Not that I'm trying to scare anybody. I just want to help you to protect yourself by protecting you. And again, keeping good records and knowing when is the right time to incorporate. Incorporating too soon is silly. Incorporating too late is wasteful. There is an exact or a really good right time to incorporate. Talk to your financial professional and they will be able to help you. As far as doing bookkeeping, understanding how to do bookkeeping or taxation, stick in touch with Cashflow Tribe and they will make sure that you understand it and that you know it. They'll help you to make sure where is the right road by having seminars and asking questions. And you or they can contact me at any time with questions. We provide our services on 3 continents and across all of North America. And we do a lot by Zoom type calls nowadays. So it's not uncommon. If somebody needs help, they should be asking. Always ask if you need something. And with bookkeeping, just keep track of everything. That will keep your taxation in check. Your taxation is very important because that is the last step in your earnings. If the CRA takes it from you, it's not yours anymore. We always say it's not what you earn that counts. It's how much you can keep. That's important. And if you need to keep track of anything specific, do it. Because the penalties, fines, interest, everything else is very, very high. I'm not sure how our time is. I think we're right around the right time. How are we doing, Daniel?
No, we're doing pretty good. We still got another half hour, so everything is great so far. Let me know in the comments how you guys feel so far. My mind is definitely shifting just in terms of like the viewpoint of how to see taxes and understanding it from a different way, because for most beginner investors, I think a lot of people are taught that taxes are bad and you got to avoid them like the plague. But then there's also a healthy approach to understanding taxes and how it can it help you in terms of protecting, investing, and growing your money, but as well being a good citizen and having the right mindset is understanding what taxes do for the city or for the town or for wherever the taxes go. And so I thought this has been pretty good. I just want to take a quick moment right now. Does anyone have any questions right now that they kind of want to ask based on what's been said recently? Anybody have any thoughts, any questions right now?
I think I bored them all to sleep.
You all asleep? Give me a reaction. Let me know in the comments. Those who are watching on the live stream, I see. There is one question. Okay, I'm gonna take a question from Facebook. Actually, hold on. Wait. We do got one question from Kevin. Kevin says, "What is the right time to incorporate?" That's a good question because I know you did mention that.
Yes,
incorporating is a good thing, but it's about timing, right? And so maybe you can elaborate on that a little bit.
So yeah, the right time to incorporate is usually around 5 after 11. Just kidding. For incorporating, you want to incorporate at the time that your business is making enough money to make it valid to incorporate, but not at a point when you may have losses that you can write off on your personal taxation. So if you have a full-time job and you have a business as well, the income from your full-time job can be reduce the amount of income and the amount of tax you pay based on losses from your business. So that's what I mean by don't incorporate too soon. If you are going to have to remodel the first place you're going to be using, you're going to have to do a big remodel job and pay a ton of fees before you start receiving income, it's not time to incorporate. If you are sitting back and you have earnings that are increasing your personal taxes by more than $10,000 to $20,000, if you have a good full-time job, like depending upon what your full-time job is, if it's not rental. If it is rental, you may want to raise that number to around 40,000. But anything above that should be going into the corporation. And then you should be on a salary. You should be being paid by the company. There's a couple of quick benefits to getting paid by the company. One of them is you get to time your income. You can time your income to the best time for taxes, which means if you have a big bonus coming up, maybe the 25th of December isn't the right time to cash the check. Maybe it's the 5th of January. Depends on your year end and how everything goes for your year. Sorry, I saw a question come up and it distracted me, but yeah,
no problem. No problem.
Capital gains for a corporation are handled the exact same way they are for a person. So the capital gain is 50% of the increased value earned on the property. So it's 50% for a corporation. It is also at 50%, but then it's taxed based on your province and everything, like your province and your federal tax. So it can be as low as 6.5%, average in around 13% on the 50% profit. Whereas on your personal taxes, you are almost always looking at the maximum income tax when you have a large capital gain, because the capital gain increases your income tax on everything else you earn money on. So the capital gain raises your tax bracket up to the top. And that way, other income coming in is last money in, highest tax paid, right? So you want to be very careful on that. But when is the right time to incorporate is when your taxes are not going to be a good thing to have because your income is low. It's when your taxes are going to be higher, so that you can take that 48% tax rate and reduce it down to 6 to 13%.
That's awesome. That's great. I hope that answers your question. Now, Stephen Manfredi has a question. He says, do all these tax laws that we're talking about here tonight, do they apply the same way in all of the provinces in Canada? Now, to give you some context, Stephen is in Quebec, in the province of Quebec. And so this is where this question is coming from.
Okay, so it's good that you said that, although I would have mentioned it as well. Quebec is different. They have their own way of doing everything. However, tax-wise, the percentage of income tax you pay is different in every province. The rules and regulations are all pretty well the same. There are very few provinces that have specific tax differences, except on properties, right? On income tax, everything is equal, except in Quebec. Quebec, they charge quite a bit more, and you have to do different paperwork for it. But the rules for incorporating and for capital gains, they're all federal, so they can work anywhere, anywhere, including Quebec. So that's hopefully that's helpful.
Oh, that's awesome. That's great. And definitely put follow-up questions down below. If you have any other additional questions, let me know if you want me to get back to the content before you address the rest of the questions. Do you want to take some time to go through more? I think there's just 2 more questions here, or we can save it to the end. What do you want to do, Bob?
We can do 1 or 2 more and then save anything else.
Yeah, you got it. So Tom Delacruz says, how much is the tax rate? How much is the tax rate of the corp for a capital gain tax? I think you did touch on this already, but maybe you just want to just recircle quickly.
Right. So capital gains, how a capital gain is calculated is and this is one of the things that I have seen people miss too. So we'll start from that. The ACB, or the adjusted cost base of the asset. The adjusted cost base is whatever you paid for the asset, plus any expenses that were capitalized into that asset. So that would include certain mortgage costs, potentially legal fees, any capitalized repairs and maintenance. Then the price of the selling price of the asset, less any expenses to sell it. That includes the real estate fees, legal fees, and anything else. Once you have that number, it's taxed at 50% of that. So a lot of times people hear that it's taxed at 50% and they think that 50% of the capital gain goes for tax. That's not what that refers to. 50% of the capital gain is taxable. So you're only paying tax on 1/2 of the gain. The same works for corporations and for people. However, with people, it goes against your regular income. Everything gets added up and you're paying tax usually at a 48% tax rate for that. Now, 48% is average. It does change province by province, right? Quebec, it's a little higher. Alberta, I believe it's a little bit lower, but it's always different all over the place. But corporate taxes are exactly the same. But again, with corporate taxes, you pay federal and provincial. So the corporate tax rate is provincially affected, right? So it does depend on the province you're in. So even a corporation in Quebec pays a little more. In some provinces, corporations actually have extra tax breaks, extra things that they can write off. But otherwise, yes, it's the same. So the main difference there is that all of your expenses against your income, and then only 1/2 of it is taxable.
Oh, that's awesome. We are in the middle of a masterclass, ladies and gentlemen. We are getting served a great one. Mammy, you said this is a good presentation. Will it be posted somewhere? This is being streamed right now into the Facebook groups and on our YouTube page. So if you definitely want to look back and just rewatch some of the stuff that was spoken, you'll definitely find it there. But Bob, the floor is back to you. You can continue now with your presentation.
Okay, so thank you for that. Thank you for the questions. It's always good to know what you want to know. It's hard for a speaker at any time who's been speaking for more than a couple of minutes in their life to know what it is that is most helpful to his audience. Unless you have a pre-canned skit, which I don't usually go with. I'm more of a teacher than a speaker. So I try to help you with everything that we can do. and find the best ways. So anytime somebody has a question, it's very helpful because it's obviously important to you. And this is your night. We're here for you. You're not here to listen what I have to say. You're here to find out what you need to know. So definitely always ask questions. Write questions down and bring them back even. Whenever you have a question, when you're not on a webinar, write it down and find somebody to ask. If you don't write it down, you will forget that it's a question. And then at tax time, you'll be going, oh, I could have had a VA. No. So please, anytime you have something, write it down. If you have questions or multiple residences or different things, the most important thing, and I know I've already said it, but keep all your tax receipts. I work with large corporations that don't keep all of their receipts. They just, whatever reason, it's not been part of their way of doing business, so they haven't done much with it. When you have a business, you have to treat it like a business. And that is one of the mistakes a lot of people make, is they treat it like a hobby. If you treat it like a hobby, CRA will treat it like a hobby, right? And what that means is that if there's a deduction to be had, they can determine that that's a hobby. Therefore, you can't deduct it. You can't deduct any income or expenses from a hobby. One important thing that may be noteworthy for everybody is you cannot claim rent paid by a relative, a direct relative, which means mother, child, sister, brother, that sort of thing. So a direct relative, it's not allowed for you to declare the income, even if you're making a profit. The reason for that is that CRA considers rental to a relative to be a non-profit enterprise. You're not looking to profit off of relatives. That way it is exempt so that you can't write off the expenses. That also means you cannot claim the income. So if you are renting to a relative and you're making a couple bucks, it's tax-free. You do not claim it. If you buy a new residence, one of the things I hear from people a lot is, if I sell a house and I buy another house, I can just take the money from the house and invest it in the new house, and then I don't have to pay capital gains tax. That's not correct. Anytime you sell an asset, it is a taxable event, and you must pay tax. So it must be declared and any tax covered, even if you reinvested it. It doesn't matter. Once it's a taxable event, you want to have it listed properly. One of the most important things you can do is list all of your rental property sales correctly, as well as your rental property incomes, because there is money in that money. There are ways of making that money work for you. And if you hide it, there's ways of ending up in jail. So let's not. It's hard to talk on video when you're in jail. So I do laugh and joke around a lot. Some of the time that is mainly to make sure that I didn't put my audience to sleep. It's also because I'm a bit of a joker, but it also helps you to remember things a lot easier. One of the things I've been telling people who have small businesses, I've been speaking to small businesses for decades, and what I talk to them about receipts all the time. And I say, I'll bring a can. If you don't want to keep your receipts, no problem. I'll bring a can over to your house, and every day you can throw some cash in it. I'll come around and collect it every month. No problem. So keep your receipts. I'm not sure what else in the area just of taxes and bookkeeping that we would really want to go over, other than any questions you may have, and the importance of thinking and tax planning. One of the things that I've always said and that people don't always see is that common sense is not very common anymore. Stop and think about everything you're doing and ask yourself, does it make sense? What would Bob do? Right? So if you're not sure, that's when you know you have a question. You have to ask, what should you be doing if you're not sure? Everything that you do in a business needs to be planned. Your goals need to be strategized. Your taxation needs to be set down and done well. Everything from the first time you rent out, if you're not doing with short-term rentals, I know that your contracts and everything are pretty well in place, and that's through Airbnb and everything. But if you're renting long-term residential renting, make sure your rent agreements or your leases out to your tenants cover your butt. That's what they're designed for. You want them to be good. You want them to be concise. The other thing with long-term rental is you really want to be careful that everything that you're doing is not going to lead to a problem. You don't want any with short-term rentals, the problem can come up very, very fast. But with long-term rentals, they dwell for a long period of time and you can come up with a huge problem. But short-term rentals, you want to be careful to make sure you've got the right insurance, that everything is taken care of, that you're properly registered, and everything is very crystal clear and planned. Most good planners will know how much money they'll make in the next 12 months before that period starts. And they'll be pretty accurate unless they make changes or COVID happens. That can always throw a wrench into anything. So if I've sparked any interest in something specific, please feel free to ask, and we'll go from there. Daniel?
Perfect. All right. So we got one question from Kevin. Let me know how you're feeling for those who are watching on YouTube or is watching on the live stream. I see Deanna. Great information. So says thank you for your insight. That's from Deanna. She's out of Kitchener, watching on the YouTube stream. Carson Chappell says mint info, meaning clean, crisp, very good. Really, really enjoying it. Now I got a question from Kevin that I'm gonna read out, but before I get there, if this isn't a question somebody has, I'm going to ask you because this is super important. What is the best system, in your opinion, for keeping receipts? What is some system that you would recommend that we start doing if we haven't started a system already for keeping receipts? Because here's what I really, really love. Here's a big golden nugget that I took away that I hope you said, because he said it, but I don't want to just move right past it. He said, you need to treat your business, like if you treat your business like a hobby, CRA will treat it like a hobby. That is massive. That is so huge. And a lot of us, we're just playing real estate. Oh, I just want to buy this property and just do this and get another property. But there's a whole business side of this, and we got to treat it as such, or CRA won't see it. And so I guess the first thing I want you to answer is, what's the best system to keep receipts?
Okay, so the best way to keep receipts is digitally, because paper is paper. First of all, you have to file it away. You have to search through it to find what you want. And then when you find it, it's already faded and you can't read it. So taking a picture of a receipt and keeping it in your own album is one good way. There are programs out there that you can take a picture of a receipt and it will convert that receipt into an expense report for you. So all you do is take a picture and it calculates everything and puts it into the right type of expense and the bank and all that neat stuff, does all your bookkeeping for you. If you're interested in doing something like that, talk to Cashflow Tribe. I'm sure that they have a way of working with it, and I can actually provide those types of systems and the training to maximize. But always, if you have a question like that, the right place to go is Cashflow Tribe, not Taxflow Tribe. We're going to change.
Oh, that you might give someone a company idea. That's awesome. You know what? I'm a little taken aback. I didn't even realize that. Yeah, you can just keep everything digitally, because I thought, hey, you got to see the paper or it didn't happen. But it's like, I guess, yeah, that's true. You can't really, I guess, do it digitally. That's pretty awesome. That's good to hear.
You can take a picture. Now, I think somebody had asked something about auto, which I didn't really touch much on auto expenses, because they're a very touchy subject. There's a couple ways of doing the expenses for auto, but that's almost an entire session. So, but in short, you need to keep 100% of your expenses. So the purchase of your vehicle, the insurance of your vehicle, repairs and maintenance, purchase of plates, purchase of fuel. The reason that came up is that exact question. The biggest loss of receipts happens when you purchase fuel. You get this long, skinny piece of paper that you throw it on your dash and you look at it later on and it's black. You can't read it anyway because it's thermal paper and the sun heats it up. If you take a picture of a receipt and file it where you can get it, you no longer require that piece of paper at all. So, for example, when I'm buying gas, I take a picture of the receipt and leave the receipt in the garbage can at the gas station. I don't even have to take it with me. For as far as how to claim vehicles, there's two different ways. The first one is, like I said, keep 100% of your receipts and log every inch your car moves. So if you're moving for personal or you're going somewhere for business, you log down and you have a travel log of everything you did and what you did when you got there. So if you went to a restaurant, don't put down that you went to a restaurant. You went out to a meal with a client to discuss something or whatever. On the receipt from the restaurant, do the same. Write down who was there, how much the receipt's for, rewrite it, and what you discussed. The other option for auto is if you're using your car for your business purposes, you can just track the business mileage and forget about keeping all the receipts for the car. All the other receipts you still need. But for the car, you don't have to keep the gas receipts and the oil and everything. And you can claim 59 cents per kilometer that is traveled for your business, that you have a log, a travel log that shows it was a business trip if the government or if CRA asks. So that's the easiest way to do it, especially if you do more personal driving than business driving. And by the way, driving to and from your office or your work is personal, not business. Even if that office is the office you do your business from, to and from the office is still personal. CRA will look at that if they look at anything to do with your vehicle. Sorry, go ahead if there's any other questions.
Yes. So I'm gonna go to the comments real quick on social media. I see here a comment from Ryan Davenport. It says, this has been great information, which has been awesome. Sandy says, awesome content. That's from YouTube. And she also has a question. She says, with regards to receipts, is there an app that you would suggest, I would say, is a good tool or resource, or is it just keeping pictures on your phone?
Keeping pictures on your phone is an interesting way, but the best app depends on what you're doing for bookkeeping. Some bookkeeping programs, especially online programs, have receipt record in them, right? So for example, I don't know if I can say names of programs in that. Is that all right? So there's one program called QuickBooks Online that has an app that can take a photo of your receipt for you, and it permanently records it against the expense in your books as well as separately in your books. There's another program called Dext that you can just use Dext, and it will actually create a business or a log of your expenses for you. You can keep all of your expenses and incomes in it. It's not a bookkeeping program, but it provides you with all of the same answers by giving you a income and expense report that you can then turn into a business to put on your taxes. So either of those type of programs would work fine. And we actually work with those and a couple of others. If what we do is we provide them and we teach. So that can be done anytime as well.
Awesome. That's great. Sandy, hope that answered your question. Thanks for the question. Let me know, all those who are in the Zoom call here in the training, let me know if you have any additional questions. We got 5 minutes left, 5 minutes left. Tom, I see your hand. Feel free to unmute yourself. Let's join this conversation.
All right. Thanks, Daniel. Thanks, Bob. Quick question.
No problem.
Can you hear me?
Yes. Yeah.
Okay. This is the scenario. I sold one property in Philippines, and I was taxed on that property in Philippines, so it already got taxed. And then my nephew sent it to me through wire transfer. So, and I put it in my personal account, and then I use it as down payment for a property. So how will it be taxed?
So if it's after tax money, it would be just your down payment on the house. It's not taxed.
So it's not income on my side. It will not be added as income on.
Not if it's after tax. If it's legitimately after tax money, no, you have no problem with it. When it came into the country, there would have been a report go through FinTrack. So depending upon what the source of the funds were on that declaration is determines how the funds have to be treated in Canada. So if that was declared as income, then you will have to claim it as income. However, if you do claim worldwide income in Canada that you paid income tax on somewhere else, you can get a tax credit for the income tax you've already paid. Right? So it's not as bad as it sounds. But of course, you have to know all of the details, finite details, to be able to answer that question fully and properly. And especially on a recording, because there are different ways of answering it when you're not recorded. That can be a little bit different on how you deal with things, but yeah. I didn't say that.
I got you. Thank you.
Yeah, no problem.
Fantastic.
I hope that helped.
Sorry, go ahead.
Yeah, no problem. I'm just saying, I hope that helped your, that answer was okay. Perfect.
Awesome, awesome. All right, we do got a couple more minutes. Throw in your questions if you got any. I'll take one question from Facebook real quick. This one is just Facebook user, so I don't know the name. I'm sorry. It says, when you talk about OPM, can you as an individual loan your business money, or would it need to be another entity entirely? This is a question coming from Facebook.
Okay, so when you borrow money for your business, it depends on how your business is set up. So corporations can borrow money from anybody. Anytime you lend money to your corporation, it is a shareholder loan. And you can charge interest, but you must claim the interest income on your personal income tax. If it is a sole proprietorship, you cannot loan yourself money. But lending to a corporation, you have more options, or working as a corporation, you have more options on everything. And one of the things that we do is look for as many options, because that's how you save money, is having options.
Having options. That's awesome. I love that. I love that. All right. So any last minute questions? We got 2 minutes left here. If we don't, I do got one I just want to throw out, but all right, we'll take one more from YouTube. This is coming from YouTube. Sandy Velasquez says, how does taxes work with VTBs and joint venture partners?
Well, there is no taxes on VTBs, right? So if you have a VTB, it's the same as having a mortgage from a bank. It makes no difference whatsoever. Joint ventures, however, depend on how they're established. They could be an income split venture. So if the joint venture is set up in such that each partner receives income, each partner claims the income individually. However, if it's through a sole proprietorship or through a corporation or through a partnership. However, you both have, before rental specifically, you both must report 100% of the income and the expense and show the partner's name and SIN number. And then you pay only income tax on your percentage.
Man, that was awesome. Really, really thankful for your time here, Bob, with us. I really enjoyed it. There's a ton of golden nuggets. Let me know, how are you? How did you feel about this call? Give me your reaction on the Zoom call. Throw it in the comments. Show Bob some love because he has spent an hour with us, giving us some awesome value. I really appreciate it. Mammy says, "Can I get Bob's contact info so I can book an appointment with him?" Is that possible?
I don't mind. It's up to you.
No, it's perfectly fine. For people who want to come in contact with you, we definitely want to be sure make that connection. So I don't know if you're able to, Bob, just real quick, maybe put it in the comments on the Zoom call. That way, anybody interested can grab it. But for those watching online, definitely want to really, really encourage you that if you are really liking this conversation, we have more of these happen on Mondays and Thursdays on Cashflow Tribe. You just got to grab a premium membership to do so. You can do it right on screen. Just grab your camera, go through the camera viewfinder, and then snap on that QR code. It'll link you right to where you can sign up. No contracts, but we absolutely would love to have you so we can help you get your first or your next deal and do it in a way where you're not just making money, you're keeping as much as you possibly can. And so there, his email is down below. Definitely reach out if you have any questions. Now, before we end it officially, I definitely want to give you the floor one more time, Bob. Any last words you wish to give to everybody listening tonight?
The one thing that I like to talk to people about, especially once we talk to how important it is that your business be treated like a business, is to quote Bill Gates. And what Bill Gates said is, you should hire smart people and listen to them. Don't hire smart people and tell them what to do. Right? So always talk to somebody who knows more about what it is that you need to do. Nobody knows everything about everything. And nobody, well, I can't say nobody, but most people did not get into business to do bookkeeping. So don't get it done by somebody else. The same as if you don't like changing your oil, don't go out and change your oil. Take it to a mechanic.
Amen, brother. Oh man, ladies and gentlemen, you have just witnessed another Cashflow Tribe training featuring the one and only Robert Watterson of Watterson Financial. So thankful for you coming tonight. If you really enjoyed it, definitely let us know in the comments. We'll be having more coming on Mondays and Thursdays. But until next time, I'll catch you later. Grab your membership, leave a review on Facebook. And if you're interested in joining the short-term rental weekend event that we got going on in Kitchener, which is virtual and in person, definitely reach out. We are more than happy to get you that ticket information. Bob, once again, I want to thank you so much for gracing the virtual stage with your presence, giving us amazing value. Really love that comment. Hire smart people and listen. Don't tell them what to do. That's why they're there. As a matter of fact, they're there to tell you what to do. So that's amazing. I love it. I love it. Well, until next time, my name is Daniel Blagrove of Cashflow Tribe. Tom, Mammy, Steven, Bill Welsh, and everyone on this Zoom call, and everyone watching on Facebook and YouTube, thank you so much. Have an awesome night, and I'll see you next time.
Thank you.